Oh boy, so things are not looking good for Trump and friends. Things are not looking good at all. Now, despite all the threats on China and acting tough, the truth is beginning to surface. You can't tariff a country that only benefits from your tariffs. Now, the idea that cutting China away from US markets will cripple it doesn't hold water anymore. It was an idea, it was a thesis, and now the facts are disproving it. Chinese net exports hit an incredible 6.4% of GDP in Q1 and Q2 this year, the highest level in over a decade. Meanwhile, Q3's export value hit nearly $1 trillion. No one can actually tell that the trade war is even happening. It just looks like a normal economy's exports growing year after year. It's a big reason why Baston is floating the idea of a truce extension. It's just to save face at this point. Now, when you begin a global tariff war, the boomerang effect will come after your own economy. The blowback effects are starting to stack. Now, yes, I know the US stock market is hitting a record high. Gold also went past $4,300. But those are flight to assets because the US currency is collapsing. A real look at the underlying health is the job situation. US job postings have fallen by another 2% month on month, and this is across the board. White collar jobs are now 8% below the pre pandemic levels. Blue collar jobs are also down, and it makes sense. The cost of production goes up, people start buying less, and hence companies requiring to hire less as well. We are also past 16 days into the US government shutdown. So more people they are left without pay. And every day this continues. Businesses from restaurants all the way to eventually Walmart, they're gonna get clobbered. And that's why Trump is doing yet another taco. He has admitted on live TV that the tariffs on China simply cannot stand. It's just not sustainable at this point. And truth be told, it's a subtle signal to Beijing that the US secretly wants to tap out. China's rare earth restrictions have US industries in an ankle lock, in a chokehold, and there's very little measures, at least on the tariff front.
If you put that 100% tariff on top of what's in place already, you're talking about 157% tariff on China. Can that stand?
No.
What is that going to do to the economy?
It's not sustainable, but that's what the number is. It's probably not, it could stand, but they forced me to do that. I think we're going to be fine with China, but we have to have a fair deal. It's got to be fair.
Now, the big fear here is China sticking to their rare earth curbs and holding the line. Production costs in the US has always been higher than the rest of the world, and Trump's tariffs have raised prices even more. There's no escape here. The effective tariff rate today in the US is 15.4%. Even if people switch from one good to the cheaper one, it drops down to only 14.3%. So there's no penny pinching your way out of this mess. But this is for overall consumption. The issue here is US industries that Trump wants to reshore and bring home. The big fear revolves around the collapse in US semiconductor manufacturing. That's the big one. There are around 20 semiconductor foundries in the United States today. A huge bunch belongs to Intel, but we also have foreign companies, including TSMC. And because of the AI boom, whatever chips made in the US can be easily absorbed by the domestic demand now. And the operative word here is now. Sure, domestic US companies might have to pay more, but there's a lot of investor money swimming around at this point. The problem lies going forward, especially if the rare earth curbs come, making chips itself could be literally impossible. Now, importing global chips will also be against US trade policy, won't it? That would just give countries like Japan and Taiwan a bigger excuse to stay home and not move factories all the way to the States. In other words, China has thrown a big wrench into the plans of Trump. US chip restrictions on Beijing were meant to cripple its AI progress, but Chinese rare earth curbs they are meant to halt US advanced manufacturing, which also includes defense. Now, this is terrifying for Washington. If somehow, I hope not, but if we do get into an armed conflict, it'll be a nightmare. China's defense industry is massive. They can scale their production 6 times faster than Washington at current levels, probably even more. The critical metals curbs could grind US production to a halt, especially for the more high-tech missiles. How can you find any conflict when you can't even make the ammunition? Does this remind us of Russia outproducing the EU weapons wise? Same thing, except on an even more massive scale when we think of the US and when we think of China. And that's why during the negotiations, we can expect China to play hardball. They have zero incentive to do Trump a solid. They could demand for a drop in US tariffs on China or, at the very least, reduce the global chip sanctions on Beijing. For the next 10 years, the US has identified a plethora of critical minerals needed for national security. How important they are to energy production and how tight the supply of them are. The majority of those are in the danger zone. If not all, they are controlled by Chinese supply chains. And this includes lithium, nickel, cobalt, gallium, and rare earths that I can't even pronounce. The production and refining of these rare earths are Chinese controlled. Now, Trump can go around town buying up equity stakes in mining companies, but there's truly no point if you're not building refining plants directly in the US itself. So I do expect heavy concessions from the American side. It's hard to see China losing this round in the tariff war. However, let's talk about the recent US banking crash. Now, over the last week, we saw a domino effect that really reminded us of the SVB crisis. And once again, it revolves around credit cockroaches. Now, this started with Tricolor that gives car loans to risky borrowers, and last month they filed for bankruptcy. And because of that, JP Morgan themselves took a $170 million hit from the exposure. Then we had First Brands defaulting on $10 billion in debt, and First Brands' collapse really calls into question how risky private credit is. Why did First Brands collapse? Because interest rates went up, the auto parts business suffered, and they can't make their debt payments, their interest payments. It's not a coincidence we are seeing this happen months after the trade war. The tariffs are crushing consumption and higher rates are exposing all the cracks in Wall Street. And now we have loan fraud destroying the stocks of US banks. Zions and Western Alliance disclosed loan fraud losses. Now, this totaled just a paltry $50 million charge off. In the grand scheme of things, is virtually nothing. But the disclosure triggered a chain reaction that crashed the prices of big US banks. And get this, in total, more than $100 billion in market value was wiped out. Now, how much more loan fraud or stress is buried in the system? And can this be part of another SVB crisis? We just don't know. Now, Biden's term saw interest rates hike to nearly 6%. Things have calmed down during Trump's term. But don't forget that we are in the midst of a trade war. Consumption is under stress. Anything from commercial property to business loans now can be the trigger point. And this is the perfect excuse for Trump. He wants rates to come down, and the more banks start to break, and the more delinquencies we see, the greater the odds of a massive Fed cut down the road. Now, the Fed is gearing up for another rate cut in October, but Trump's man Miran wants even more aggressive rate cuts, and the recent loan collapse is really giving ammunition to his case. If we don't cut today, we could face a horrific crash tomorrow. The economy is cracking and lowering interest rates is the only way to go, and that's probably the narrative Miran is going to sell. Now, what's disturbing is how he's trying to gently shift the Fed stance from data dependent to forecast dependent, because who knows what you can forecast? It's just a crystal ball prediction that Trump can make.
And if we don't, then I would rely on what I said a moment ago, which is that policy should not be overly data dependent. It should be forecast dependent.
That's not how the Fed operates, though. I mean, how many times do we hear Fed Chair Powell say data dependent?
I mean, I think that you want to be data dependent if you either you don't have a forecast or you don't believe in your forecast, right? Or you don't have.
But if you look at the forecasts of the Fed in the dots, they project their economic and inflationary outlooks. They're mostly not right.
I think that is something that every forecaster should hold them, should hold themselves to account for when they're right or wrong.
However, if we get the massive cuts that Miran or Trump wants, this will hammer the dollar down. The rebound that we saw in the last week is going to U-turn and crater. Now, sure, that's good for assets like stocks and gold, but horrible for the US economy. You are taking one step forward and 10 steps back. That's going to be the slogan for 2025. The US dollar is on the verge of another collapse going into late October. we have trade tensions between the US and China. The curbs could crash US production and exports, making it even worse for the dollar's strength. But the immediate danger now comes from the Fed rate cuts. One cut in October will be bad enough. Two cuts could set off a chain reaction and replunge the dollar. You'll probably retouch minus 10% again for the year if that happens. Now understand what these would mean. Buyers of US bonds will be suffering a lower yield, especially on the short end of the curve. So they could move money towards risk assets, especially during this trade war. Putting money to long-term bonds is also really risky. Unless we get a full-on recession plus implosion, that 4% yield won't make up for real inflation plus the tariffs. But we'll likely go full steam ahead into the rate cuts. A 50-point cut by the end of the year is getting very likely, and Trump is going to use any reason we can get. It's really a twilight zone economics in Washington at this point. Now, Trump's man is flagging US-China tensions to US growth outlook. He's forecasting a collapse. So now we have to cut rates to preempt the US economy slowing down. There's only so much the dollar can go down without triggering a major seismic event. Now, central banks around the world will move away even more from the reserve asset, which is US Treasuries. If borrowing comes solely from domestic funds, banks, and Americans, then we have a big problem. Because when the debt eventually pops, and it will pop, the backholders will be domestic investors. And this is just in investments alone. We aren't even talking about US import costs rising higher. That's a whole other quagmire. The Treasury situation is bad enough. Now, two of the biggest holders of US Treasuries are already moving away, not just in absolute amounts, but in terms of percentages as well. Japan's share of US Treasuries have gone from 40% in 2004 to 13% this July. That's an incredible drop from a US ally, and if the dollar keeps losing value, more allies, they'll have to take a more practical approach. There's no choice here. China's share of US bonds have also plunged from nearly 30% in 2011 to just 8% in July. In October, we had expected to drop below 7% or worse. China's still selling. China's motivation for dumping dollar assets are really multifaceted. The dollar losing value just makes their conviction stronger to de-dollarize. So the US is caught in a lose-lose situation, and something has to come to a head. If they lower rates, asset inflation gets worse and the wealth divide gets even more severe. That much is certain. However, if Trump doesn't force a rate cut, then we could have a systemic crisis on our hands, more banking crockages could surface, and even more collapses might occur. And flipping a coin, I'm betting more on aggressive rate cuts. It's always easier to debase the currency than allow the entire system to crash and burn. So strap yourselves in, buckle up, buttercups. But let me know what you think. Is Trump about to fold to China? And is the dollar due for another plunge down? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through this economic Armageddon.